Hi, this is Zach here with the US Chartbreakers here at Zach's Traders Cafe for Friday, the 31st of March. Starting off with the S&P, where we've managed to break free convincingly of the little range we were in between the 200-day moving average around 39.40 and the 50-day line around 40.20. Decent end-of-day close yesterday outside those parameters and above 40.20. We're looking for not only 40.80, which was the initial March peak, but then up to as high as 4200 over the following few weeks. Best case scenario target here, which seems somewhat unlikely, it has to be said, up to 43.20 and that old September 2022 resistance line projection. Below the 50-day line then obviously risks another test of the 39.30 area, but doesn't seem to be on the map at the moment. Moving along to the stocks, and the first one is right on the zeitgeist in terms of the name of the company anyway. We've got C3AI, and here you can see that it's hopefully third time lucky in terms of breaking through the $29 area. Third time lucky would then take us up to $36, the top of that rising trend channel from last September. Only well below the $24 level now, the recent swing support really delaying the upside scenario. On to a stock which I've covered in recent days, EVgo. And here we've had an unfilled gap to the upside through the, towards the 200-day moving average around $7.10. Be interesting to see whether we can get a weekly close above the $7.10 area so that we can then target as high as $9.10 at the top of that rising trend channel from the end of November. Stop loss at the moment back below the 50-day moving average, currently around $6.10, so relatively tight ranges there on EVgo. Moving on from EVgo to the next one, which is Freyr battery, and maybe not entirely unrelated area. Here we've got a broadening triangle there from back at the beginning of December, top of the channel there at $12.25. An end of day close as we had yesterday through the 50-day moving average suggests that above $8.50 we're looking for that $12 mark, perhaps as soon as the end of next month. We've got the 200-day moving average now rising, which is quite encouraging. Probably just waiting for the 50-day line to catch up, and it's a bear trap from below the December support there at $8.12. And the longer we stay above that, the better this chart looks. On to Loop, and here we've got Loop Industries with the breakout that we've had this week through the old initial 2023 resistance around $3. Above that, we're looking for $4.40, which is the top of that broadening triangle from back in October. Obviously, a bit of maybe a bit of resistance there at the 200-day line, but at the moment, for 40, the target there over the next couple of weeks. Requested stock is next, and this is an interesting one, MercadoLibre. So here we've had a beautiful consolidation over the course of the post-January period. Sideways consolidation, almost entirely above the 50-day moving average at 1180, and above that looking for the top of that rising trend channel from back in November as high as $1,500. At this stage, ideally, we just stay above the $1,200 level, as that is the floor of the channel and the broken resistance line there from earlier this month. Smaller type of stock there in terms of the dollar numbers. Rising trend channel here for Oak Street Health, and good support here, sideways support, sideways shuffle as I call it, above the 50-day moving average of $33.70. Above that, we're looking for $50 as soon as the end of next month, as the situation will hopefully likely accelerate over the near term, but don't expect any weakness there below $36 at worst on Oak Street. Now, one of the recent massive rises on the US market has been Pyxis Oncology rather. And here we managed to hit our $6, basically our target towards $6, $5.70. And above that, looking for a new leg to the upside, which hopefully will be as high as $8.50, which is a March or 1 year resistance line projection for $8.60. by the end of next month. The only issue here, obviously, is that we've come up a long way, and the retracement could be rather more powerful than maybe some are hoping for or expecting for. But above $5 and the old 1-year resistance, we are looking for up to $8.50 on Pyxis Oncology. Stock which is also looking quite meaty at the moment is Palisade Bio, and here the situation is that we've been bouncing along the bottom over the recent past, but we've got this broadening triangle which has been in place since the beginning of the year, and above the 50-day moving average. That's currently around the $2.20 level, looking for $4 as soon as the end of next month, with that bear trap gap reversal and the very sharp break of the 50-day line helping the bull cause. In fact, we've also got bullish divergence line there, so that does suggest there's going to be plenty of momentum there behind the current move. On to another request, which is Shopify, and here you can see that shares have been improving over recent weeks. There's a rising trend channel there from August. The floor of the channel there around $44.20, and above that we're looking for as high as $60, perhaps as soon as the end of May. Just want to get through recent resistance around the $46.80 zone, which would then hopefully confirm that we are on our way up. In fact, recent support $47.32, so that's really the level to break before we can start targeting as high as $60. Another stock which I've been covering quite a lot of late has been Scynexis, and here we've had a massive gap to the upside. The old resistance there back in November around the $2.50 mark, and above that we're looking for $3.50 as soon as the end of next week. Very strong candle yesterday as well, so that does bode well for a potential move to the upside. Last three now in today's selection. First is Taylor Devices, and here we've had an unfilled gap to the upside. It's the second one in the recent past. In fact, it was an island reversal that we had in basically back in December. Current view is that above yesterday's low there at $18.15, we're looking for as high as $24 over the next couple of weeks, which is the top of that rising trend channel from back in August last year. So looking pretty strong there on Taylor Devices. The next situation is one which is also giving the bulls some cause for optimism. Tempest Therapeutics. Here we've had unfilled gap to the upside through the 200-day moving average, easily breaking now the recent support around $2.78 on yesterday's close. And the longer we stay above that particular level, if I can just get the shares back again, the longer we stay above that, the greater the chance of a move up to the $4.20 area, which is the top of that broadening triangle from back in June last year. But the key here is holding above that 278 level so that we can get to 4 pretty quickly. Covered the next stock and the last stock, I think this time last week, and here we've had a beautiful turnaround here with the gap through the 50-day moving average. Initial target here up to $20, which is a resistance line projection there from November. Above that, maybe on a 1 to 2 month view, up to $30, maybe by the end of May. But $20 hopefully over the next week or so. Support likely to come in hopefully above the $16 level. You can see that yesterday's low was around $5.50, so ideally we won't see any price action, at least an end of day close back below the $16 area. That's it for me today. More updates over the weekend.